Hello and welcome to this week's market update for July 31st of 2017. And here are some disclosures for you, as well as this week's agenda. So we're going to go through the broad market readings and then this week's operating plan. First things first, are we in bear market territory? Not even close. If you ask me if I'm worried about a bear market, not at all. In order for me to be worried about a bear market, we got to get below below treasury bills right here, and we are not even close to that. So right now the S&P 500 is slightly underperforming the All World ex-USA Index, which is why we're focusing right now on the international indices. As far as correction risk, it's a little bit higher. You can see right here that breadth by these two lines, these two oscillators right here, is decreasing. Both of those are decreasing while while price is staying the same. So that suggests sideways to down movement. If we do see breadth decrease down into the oversold territory and price hold within this area highlighted in red right here, that would be great for the bulls. But right now, what breadth is saying is to suggest sideways to down movement for the S&P 500. When we look at the stage of the S&P 500, we're still in this broad bull channel. You can see we've got a lot of room to move before we break that channel. We see consistent higher highs, but what's a little bit more for the bearish is we've got this possible wedge pattern we've been talking about for quite a while now. We've got 1, 2, 3 pushes up. We had a neutral week last week as far as the bar goes, the doji bar, and it just shows that momentum is slowing right here. And so if this does play out, really what that means is it could lead to a few weeks to several weeks of down to sideways price action. Anywhere 4 to 10 weeks or so would be a typical pullback from a wedge pattern like this, which would put us into a trading range in the S&P 500. We look at the operating plan, still like preferreds in the All World ex-USA Index for the weekly swing, Canada, UK, Russian, RTS, and Japan. Nothing for the scalps. As far as the All World ex-USA Index, up 0.21%. Nice breakout to the upside right here. Decent follow through. Not good follow through this past week, but nice, okay bull bar. And we're still well within this, what I would say is a tight bull channel right here. Really, anything above a 50% retracement is bullish for this index, and if it does break down, then we will be looking to purchase some more if we get a nice buy signal. As far as the Canadian index goes, up 0.33% for the week, managing this one like a swing. Still got our stop below here, and probably move it up a little bit more, but like to see a little bit more bullish price action before we move it up, and because we want to give lots of room to move around. Could be a double top right here, but hopefully what we'll see is a nice bull bar to the upside breakout, which could attract some more buyers. As far as the UK goes, it was a flat week after it was all said and done. Pretty volatile week for UK. Down below last week's close, and then closed slightly above at 0.04% from the previous week. I would have liked to see some more follow through, but overall still looks pretty good. Still above this bullish in the bull channel line right here. And if it does break down, we're going to look to get some more possibly in the second purchase range right here. And we've got our stop way down here. So lots of room to move, and the position size reflects that. As far as RTS, bad week for RTS, down 1.16%. And the bullish thing about it is it did hold above support on this shorter term right here. Held above support, closed above there. So we'll see if we can get some follow through. What we really like to see is it break above this bear channel line right here, and then a consistent move of higher highs and higher lows. So still like it for right now. Got our initial stop down here, and we're going to hold it there for the time being. As far as Japan goes, it was a neutral week for Japan, down 0.03%. Got a second purchase area around here, and then a stop price down here. So it could be a double top in Japan, but we'll have to wait and see. Good that it's holding above the breakout, where it broke out way over here, and so we'll see if it can continue to the upside. As far as the monthly trender, we want to continue to build in the All World ex-USA Index. And as far as the weekly swing, what we like is the oil index. Oil is a little bit different pattern than what we're seeing in the other ones. It's more of a trading range. You can see we've been trading sideways since really February of 2016. A lot of sideways price action, and what we would be thinking is that it's going to break out to the upside. Don't know if it will do that. Could break out to the downside, so what we're looking to do is just build a little bit, just start building into it in case it does break out to the upside. And if it does, if we get some more and does fall, then we'll be looking to get some more in the bottom third of the channel. And that would be, if we did that, then it would be more of a scalp. But right now, like it for to get a little bit involved, and then possibly buy some more down in the bottom third of the channel. And with that, that is it. So it should be a good week, and you have a great week.